A lot of cryptocurrency holders are frustrated. The correction just doesn't seem to end. The question is, do we get another all-time high in this cycle, or are we already sliding into a bear market? We want to take a look at the Bitcoin chart today. I also want to share with you a couple of indicators. So let's take a look at it. Let's go. Hello and welcome to another Bitcoin market update by MCO. Today we want to take a look at the Bitcoin daily chart and the long-term charts. I also want to share with you a couple of indicators that indicate that we could be close to a turnaround, a possible reversal to the upside, and we want to take a look at what we need to watch for right now and what are really the critical levels. So I would say let's take a look at the indicators first before we dive into the charts. What I wanted to share with you I just want to share with you a couple of indicators from Glassnode's latest report. First of all, this is interesting because this indicator, the short-term holder rolling 30-day realized loss, it is an indicator that shows you here in orange basically what the realized loss of the short-term traders and short-term holders is. Why is this important? It is important, first of all, from a historical point of view, to be able to compare that selling pressure, or let's say liquidations, or just a realized loss among those really the short-term holders, comparing what happened recently with what happened historically. And as you can see here on the chart, that historically, especially these capitulation events in 2021 and 2022, you see those realized losses. They were much, much higher than what we had down here. This year recently, in February, March, was significant. They say short-term holder realized loss, 7 billion over the last 30 days. Now, this report is from the 18th of March. That is quite significant. It is the most significant realized loss that we've had basically since those events here, especially 2023 was before, the highest one. So basically in this cycle, you could say, we've got the highest realized loss among short-term holders. It is important to note, however, that we are far away from what historically have marked significant capitulation events. So we are not there yet, meaning this doesn't really have bear market quality, because what happened in 2021, even though technically people don't call that the bear market, mid-2021, it was still formally, from an Elliott Wave point of view, part of the bear market, because it was the former Elliott Wave price top in early 2021 was actually the bull market top. Yes, there was a higher price top, but it was actually based on Elliott Wave structures, already part of that larger correction. So this is something to be very much aware of. Why is this important as well? Because while it is a significant realized loss, it also means that if we are still holding bullish structures and support at the same time, it means that the sellers at some point will get exhausted, and people will have realized they have to realize their losses at some point, right? And when they get exhausted, the sellers, that is when the buying pressure can come in. And that is also what we see on this other indicator, which is called the long-term holder spending binary indicator. Don't want to make it so complicated, but what it shows here in green is that the supply, long-term holder supply has started to increase again. Sort of in February, March, it started to increase again. Why is this important? Because while long-term holders have been taking profits since September, October, as you can see here last year, and the supply has declined, they now start to accumulate again slowly, and you've got these two factors where short-term holders were under pressure, and they had to realize their losses, right? It said realized losses, so they had to realize their losses. At some point, they just had to sell their losses. That's just what traders have to do. And then while they are selling, the kind of long-term holders are starting to accumulate. Okay, so they are selling it to, let's say, long-term holders. That is positive. So selling pressure on one end, but buying pressure is coming in. So this is also what the Elliott Wave structures are showing us. I want to share with you here the daily time frame first, then we take a look at the longer time frame as well. But here on the daily chart, what we see and what we've been discussing in recent weeks and months was that in this correction, so far we haven't got any confirmation that the overall correction is complete. So the formal confirmation is still not there. And the main support area here for this so-called fourth wave pullback is located between 69, so the support area is located between 69K and 82K. And this is the area where we're watching for reversals. So we've had long-term holders sell, short-term holders sell, and now we're in a situation where those long-term holders are starting to accumulate again. In addition to that, we are holding still Fibonacci support. The pullback from an Elliott Wave point of view is still a three-wave move. Why is this important? Because three-wave movements are still leaving the door open for higher prices. So we are holding Fibonacci support, which is important to keep an overall bullish expectation alive. At the same time, the pullback does not clearly indicate that we have topped. There is formally no evidence, at least not from a market structure point of view, to say that a bull market is already over. That being said, I think we are very, very close to a bull market top. I've been highlighting that many, many times. But please note as well that recently one of these buy indicators flashed on the Bitcoin chart, which historically just hasn't failed. I made a specific video about that. It is the relative strength index. It sounds quite simple, but it's a really reliable signal for Bitcoin. The RSI, the relative strength index, when it was oversold end of February, that was not the lowest point on the price chart. The price formed the lower low, but the RSI formed the higher low, which means this is actually a so-called bullish divergence. And whenever historically the RSI was oversold on the daily chart below 30, then this was historically a really good buy signal, also in the bear market. Even though in the bear market you just have to make sure that you take profits more regularly and you trail your stop, or you just risk it goes down further, right? But even now, again, it was a good buy. If anybody acted on that one indicator, either down here or when we made a lower low, I mentioned that indicator in the last videos, then you would already be in profit. The thing is, though, that we haven't really seen that turn around yet. The price has shown a first reaction to the support area, absolutely, but we're currently stuck below this trend line. Now, I don't want to really do any short-term analysis here. I just wanted to highlight to you, look, we're still holding support. We have indicators that Glassnode is presenting to us that indicates there is a likelihood that the price is starting to turn around from here. It doesn't need to be here. It doesn't mean the low is in, right? We could easily still get another low. This support area has room all the way down to 69K. And I don't see any reliable reversal yet. I don't see any reliable reversal, which means that one more low is definitely still on the table. That's exactly what I told you just a few days ago in the video here on this channel. Since then, we've seen a little bit more upside, but not really any game-changing movements. And my view is still that we should get sort of medium-term a rally into that red resistance area between 90.9K and 103K. And this is where we will probably get a decision. The market will decide, has the bear market started or not? Because if we get a rally from here and it's only a corrective rally in 3 waves, and we see the first 5-wave move down, on the micro level might be enough, and we break some support levels, then it is a really good indication that the bull market has already topped. I mentioned that to you many, many times in November, December, that from here, everybody needs to be prepared for a bear market, right? The problem is we have now, only now people are starting to talk about it. Not many people talked about it in December, November. I was constantly warning. Obviously, you can't confirm it or predict it until support levels break. But for traders, investors, it's always important to understand where is risk high, which was here. Now, in my opinion, risk is much lower, clearly, because we're now in a support area. Up here, we were far away from support. So from where we are now to know that a bear market has started, the distance isn't far, right? So it's below 69K, I would start to assume we're in a bear market. As long as we're holding above 69K, I just don't have that evidence, and I'd rather see another rally. The structure of that rally will tell us a lot about, okay, do we get another all-time high or not? As long as the rally stays corrective in nature, we have to be careful. But even in the white scenario, which is the bullish one that can take us to 130K plus, the rally might be corrective because this is an A wave. We get a B wave down and a C wave up. Why is that the case? An ABC structure? Because in my view, the rally from the August low 2024 is a so-called diagonal pattern, which means the subwaves are all corrective, which means also the 5th wave would be an ABC structure. What we need to be watching for, once we have a confirmed low, and Again, this is not a micro analysis. If you want to see the micro analysis, the daily express updates, check out our Morecryptoonline channel. The link is in the description. This here is really just for the macro view, macro perspective, more in-depth analysis. As long as we, when we have some kind of confirmation that a low is in and we go higher and pullbacks remain corrective, the focus can remain on higher prices. This is a decision area here we need to be watching, but overall, I would still prefer one more high in the cycle. Now, what else do we need to be watching for? What else do we need to be watching for? It is important to be aware of, okay, what could happen in the next bear market. Now, let's take a look at the long-term chart, really the larger degree long-term chart. And here you can see the structure from the 2022 low. It is a potential 5-wave move up. We already have 5 waves, as you can probably see, but one more high would still be ideal to even form a solid 5-wave move up from the August 2024 low. Is it absolutely needed? No. Okay. And there are a lot of people talk about like really moon counts, moon Elliott Wave counts, where this wave 5 is suddenly a crazy extension. I mean, like anything is possible, but it's just not, you can't rely on that. We have to go with what is the most probable scenario. And for me, one more high would still be probable. But then after that, we have to be really, really careful because this could mark the beginning of a large correction. Now, this is only one of the scenarios. I'm tracking here a major correction that could be that could happen in a bear market. And in this scenario, the rally, the third wave rally, would be really a pretty much decade-long rally that happened here. So all of this move needs to be corrected in this particular wave count. This is what Elliott waves are suggesting, that probably after the next high. But again, this is just noise. Even on this chart, one more high or not is really just noise. What we need to understand here on this chart is that the macro risk is getting very, very high because we already have a 5-wave move up visually complete from the 2019 low, 1, 2, 3, 4, 5, and a much larger 5-wave move pretty much complete. The question is just, do we get another high on the micro, which at this point I would still prefer. From here, if a larger correction starts, it could be this substantial wave 4 correction, which could even take several years. We just have to be prepared for that. Now, my game plan is, if it happens, and this initial A wave could take us into the 40 to 50K region, I plan to buy this A wave correction, trade the B wave, and then just need to be ready for the C wave. This would be perfect from a typical sentiment point of view, because once we get this initial flash crash, which could be this A wave, a lot of people will be bearish, panic sell. Then we get that B wave rally. Everybody gets bullish up here because we might even see a new all-time high in that B wave. And then this C wave could take us into a bear market, and that will frustrate everybody who bought up here. This is only one scenario. From a game plan point of view, I mean, my view is that everybody needs to be prepared that this could occur. So structure your portfolio accordingly. That means I don't want to be a panic seller when this A wave happens. I'd rather have cash ready to buy the B wave and then be ready to maybe even ride it to new all-time highs, which can happen. For example, if we don't get that one more high here, sometimes when ideal targets aren't reached, the B wave gets there eventually. Okay, sometimes the B waves do that. They can overshoot and they sometimes get to these all-time high targets if ideal targets weren't reached in the actual move to the upside. So this is just one scenario. This could be a long bear market. Be ready for it, okay? But there is a more bullish outlook as well, and you can let me know in the comments which one you prefer or think is more realistic. The other scenario that I am tracking is a scenario in which the move up from the 2022 low isn't ending something, because in this other scenario, the 5-wave move ends something. A 5-wave move can always be the beginning or the end of something. In the previous count I just showed you, it would be the end of something. In this scenario, it's the beginning of something, because it would be a so-called wave 1 to the upside of a much larger move up. Yeah, a much larger move up. People might call it a super cycle or something. Also here you can see that we are kind of in this long-term topping area, and a correction could happen. Now, you see there it is very similar to the previous scenario in a sense that also here we are very close to a top. A larger correction is likely going to unfold soon. It probably hasn't started yet, but again, this is a question that needs to be answered in micro analysis. From a macro point of view, the risk is quite high because the standard support area for a wave 2 correction is between 23K and 52K. So what you see here as wave 2 correction is basically what we had on the other chart as A wave. it will have the same magnitude. So we will probably not be able to tell the difference. So from a strategic point of view, I think for me it's quite simple. I will buy this correction regardless, because it could be a wave 2, which opens the door to a major rally. And in the other scenario, it's an A wave, which also opens the door to at least a B wave recovery, which, if I know this scenario, I don't want to miss on, because it might turn into this a much more bullish scenario. Now, this is not so much a question of which one it is, because we won't know until we finally start to see the structure of the rally and maybe the structure of this pullback. It's more about being prepared for it and having a game plan, because for me in both scenarios, both scenarios suggest that this year could mark a significant low. And okay, do we go to 50k, 40k? Impossible to say at this point, because we first of all need a confirmed top in place and see a little bit of the structure of this move down. At the moment, I would still keep the door open for higher prices to maybe 130k, which is one of the next FIB levels. So be prepared for that. But I would want to be prepared to buy the dip. That's at least what I plan to do. And be aware that a lot of people will be over leveraged up here, over positioned still, and then they will panic sell when the market goes down to 40 or 30k or 50k. It's incredible how many people will say, "Oh, I will buy that," and then when we get there, the market sentiment will be very bearish. And it's just incredible how market sentiment can just destroy demand. Okay, but yeah, that is my view about Bitcoin. Let me know what you think about these two scenarios. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in short-term updates about cryptos, make sure that you check out our Morecryptoonline YouTube channel for rapid market updates. Also check out our crypto membership for really in-depth daily short-term intraday updates and much more content. You'll find all those links in the description. Let me know in the comments if you have any suggestions for other videos. Thank you very much. Bye-bye.